You'd think after the year Disney had last year, things couldn't get any worse. And then when we look at the stock chart at Disney, looks like it might be wanting to fall off a cliff. We'll talk about that and more on today's video. What is going on, investors? Hopefully you guys are having a great day out there. It is time to talk about Walt Disney Company, iconic stock, ticker symbol DIS. Over the last year, the stock is up, actually just marginally, about 22%. That's a little more than marginally. But I tell you what, year to date, you're basically flat on this one. And we are seeing this stock trade down by about 5% in the after hours. And from a technical perspective, it looks really, really bad, okay? In the shorter term, I tell you what, it could create a massive, we're talking about a massive buy the dip opportunity if this stock breaks down technically. We'll talk about the levels we think it could potentially go to here in the future. Now, this is on the heels of announcing their full year fourth quarter earnings over at Disney. They basically missed on the top and the bottom line. Revenues in the most recent quarter came in at $18.53 billion. That is up 26% year over year. But again, it missed expectations by about $240 million. Now, when we ever look at Disney, we're going to look at a couple different things. First of all, we're going to look at their two divisions, okay? They've got ABC, they've got Disney Plus, they basically got their Disney Media and Entertainment, and then they also have the Disney Parks, like basically Disneyland, Disney World. So we'll talk about both of those segments, look at the revenues and the profits on each of those segments, see how they've trended over the last year, and then we've got to look at some other things as well. So we take a look at the revenues and the profits and the cash flows, just like we normally do over at Disney. Now, the first thing I want to start with are the two different divisions that they have. So we have Disney Media. This is essentially the movies, the TV, everything that's traditional media over at Disney. You went from 11.9 billion up to 13 billion. That's good for 9% growth in the most recent quarter. Over the last year, you grew that division by about 5%. I think here's the worrisome thing, and it might have investors like kind of worried about this stock to a certain degree, is take a look at what happened to the profits in the most recent quarter. So here's our segment operating income. It went from 1.5 billion all the way down to $950 million in the most recent quarter. That's down to 39%. That's a problem. Now, Disney Parks, as we know, last year Disney was, open and closed and open and closed again, and that was pretty much across the world. So we saw massive revenue growth here. Okay, you did 2.7 billion in the parks last year on a quarterly basis, and this year it ticked up to $5.4 billion. That's nearly 100% year over year growth on that quarterly basis. Now, our profits, not that great. Okay, you went from a $945 million loss. They were basically carved back the parks last year to try to break even, essentially. Well, this year you made about $640 million on this quarter ended. So all things being considered, you made this operating income about $1.6 billion. Last year, it was much, much, much lower than that. But you see for the year ended, you actually declined on that operating income side. You went down from 8 billion down to this 7.76 billion dollars. Take a look at that in a little bit more detail here. When we get to the profit and loss statement, we've got our revenues up here at that $18.5 billion on the quarter. For the year ended, you finished at about $67 billion worth of total revenues for the entire year versus about 65 billion the previous period. Now we have cost and expenses, obviously, got some interest and maybe some other things. We come all the way down to our income from continuing operations here at $290 million in the most recent quarter, and we talked about how it was 2.5 billion in the most recent year. All things being considered, you pull it down to the net income side, the company earned just $1.09 diluted on their earnings over the last year. I tell you what, for the full year, net income came in at barely $2 billion, and you got a $321 billion market cap on this one. Yeah, people are wondering if this company is making enough money to support that type of valuation at the current time. Now, the balance sheet looks really good, okay? They've got plenty of cash here. Looks like maybe a little bit less than last year. Looks like they paid down some borrowings. We'll see that in cash flows. You went from 53 billion down to this 48, and on the current portion of that debt, basically about the same. From a cash flows perspective, kind of paints a little bit uglier of a story, okay? So you pulled down a negative net income number last year, and we all know why, okay? They lost a ton of money on their parks because they just simply could not be open. they lost $2.4 billion. Investors gave them a pass. This year, things are a little bit more opened up. You earned $2.5 billion for the year. Well, our cash flows from ops actually went down by $2 billion. Take a look at this. We earned $7.6 billion cash from operations. That went down to 5.5. We did repay some borrowings over the last year as well. This company is being prudent in terms of paying down their debt, so you got to hand it to them in that sense as well. Now, unfortunately for shareholders, this thing is absolutely fallen off a cliff. So I had this marked out, this area marked out with our lower red line. I have this arrow over here. I'll talk about what that's pointing to here in a second, but the stock is trading right now in the after hours at about $167 per share. I have a level of support that is held since December of last year, right here at, we'll call it $167 per share. You've seen 1, 2, 3, we'll call it 4, maybe even 5 or 6 times here. That level has held. But what I want to point out to you as well, that this stock is actually in a pretty well-defined downtrend. Okay, we made a high back here, a lower high, and it appears that we're making another lower high down at this price range. This company is in a downtrend. And the reason why I have this big old arrow pointing to basically nothing over here is this is a big price gap. Okay, my assumption is maybe Disney announced earnings or some kind of positive news back in December of last year. You went from 156, my guess is a certain shot, I think, became available right around this time last year. You went from 156 up to about $166 per share in one day, okay? And you also skipped a couple price actions before that as well. That's why if Disney stock gets underneath where it is right now, I mean, we're talking about 50 cents, $1 under where it is right now, this stock could free fall. This stock could come down to 154. If it breaks through this price action down here, you've got another gap to fill down here, lower than $134 per share. That is potentially where Disney is heading. I tell you what, I would put this stock on your watch list. I would not really get super excited about jumping in at this level that now appears to be below the previous areas of support. Now, we do have this one little lone candle sitting out here at about $160 per share. That, I guess, could be potentially the low, and you will have filled this gap a little bit, almost halfway, okay? Gaps don't always fill all the way, but typically they want to come down here and fill this price gap, and that's kind of what we're seeing, at least in the after hours trading with Disney. I would put this on your watch list. The further down it goes, I would wait to see some sort of reversal pattern. That is where you start making higher highs on this stock. You see that down in this price range, it will mean buyers have stepped in. But this level does not convince me that this level will hold, so I would not necessarily buy the dip on this one until we see evidence of a reversal. Like I said, we are in a longer term downtrend on this one. Volumes are starting to slip off. It doesn't look like people are necessarily piling into this one to buy the dip. And then when we looked at the financials from a profit perspective on their #1 revenue generating unit, went down to 39% year over year. And while the parks probably weren't even close to full capacity, we still only cleared $640 million worth of revenue in the most recent quarter. And even when you pull this out to a full year, we saw the #1 revenue and profit division decline by 5% year over year, and parks were essentially flat, basically a rounding error from a profit perspective. That was Disney. I'm super excited about this stock if we can have a deep pullback on this one. You do not have the dividend. You don't have people holding this stock anymore for that consistent dividend. You've got a high price to earnings multiple on this one across the board. This stock looks like they've either need to talk up investors and start turning things around, or technicals will take over and this stock will head lower. That was Disney. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.